Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stewart-Peterson, I'm Bob Devenport and this is your Dairy Week in Review for February 20th, 2015. So to get started here, let's take a look at where our CME dairy component settled at the conclusion of this week's trade. Overall, it seems like it was a quiet week here for the cash markets. However, it did have some big impacts in Class 3, and we'll touch on that later. But looking at the cash markets here, block settled the week at 154.5. That's up 1.5 cents on the week. Barrels were unchanged on the week at 148.5. Cash butter settled at 172.25, up just a quarter cent this week. March whey settled at 48.5, down half a cent on the week, and March non-fat dry milk settled at 114, about down almost 3 cents on the week. Now, Class 3 prices, again, seems like it was a quiet week overall, but there was a heck of a lot of volatility in there between Tuesday and Friday's trading sessions. The markets really moved quite a bit, and we've seen a lot of volatility over the course of the past few weeks here, and we'll take a look at that once we take a look at Class 3 charts in just a bit here. But looking at just the price actions from last week's settlement to this Friday's settlement, March settled at $15.53, up just 1 cent on the week, and April settled at $15.32, up 12 cents on the week. So that brings our 2015 average price to $16.43, still with a gain of 7 cents over last week's settlement. So let's start by taking a look at our cash markets here once again at our weekly block barrel average chart. So you can see here that our price action over the course of the past few weeks has been relatively flat. The block barrel average hasn't moved really in either direction, much more than a penny or so. And as of this week's settlement, we are only up 3/4 cent on the block barrel average on the week, and that's a settlement price of $1.51.5 a pound on the block barrel average. We've been hanging right around that $1.51 area, $1.50 or so, again, for the course of the past 3 weeks or so. And you can see on our weekly block barrel average chart here that we're still holding relatively close to our recent lows on the block barrel average, which were about $1.44, $1.45 or so, is where we finally found a bottom after selling off from our record high back in September to the bottom here back in the December to January time frame. And we haven't been able to make much headway to the upside in cash cheese here. Recently, we've been finding more of a market equilibrium though. The buyers are interested in buying around $1.50, but at the same time, the sellers are interested in selling. So we're seeing some volume move, but there isn't really any price movement in one way or the other. And that is the exact opposite of what we've been seeing in Class 3 futures here. They've been extremely volatile, and it hasn't really been the cash cheese market that's been moving those Class 3 futures, which is typically the case. Normally it takes a big move in cash cheese one way or the other to see a big move in the Class 3 markets. So I think once the cash cheese market finally breaks out in one direction or the other and finally gains some traction there, whether it's up or down, that's going to still move the Class 3 markets quite a bit in addition to the volatility that we've already been seeing. So moving forward here also, let's take a look at our cash butter and cash powder prices. So here we have a weekly chart of both butter and powder. Butter's represented by the blue line here, and powder is the pink line. Once again, we got a little bit more of a rebound here in both butter and powder from the lows. We saw a pretty sizable rally actually in both products in the cash market, unlike that in cheese. Cheese has kind of been hanging around. We got a really nice rally up to almost $1.80 or so on butter. And we settled the week here this week at $1.7225, up a quarter cent on the week, but we're still down quite a bit from the high, which was close to $1.80. So we went through a nice correction there from the low on cash butter. That correction may be done with here, and possibly we're at the beginning of our next leg down. We'll obviously have to see how the next week goes or so in cash butter to really get a clearer sense of where prices might be headed, if this correction is over with and we'll see more downside, or if maybe there's some more life left on the upside here. Kind of the same story in cash powder as well. We can see that we put in a low here back in the December time frame, and we got a really nice rally. We were under $1 for quite some time, and we rallied up to about $1.15 or so, and then this week we sold off 4 cents. Most of that selling pressure took place during Thursday and Friday's trade, and there was just a tremendous amount of offering. It's like the sellers just couldn't get rid of powder fast enough in these past couple of days, which is a little bit of a warning sign, especially given the news out out in New Zealand of drought conditions. New Zealand is a very big exporter of powder, and if they're at risk of seeing production declines due to drought conditions, it could tighten inventories for other products like powder, cheese, and butter. Now, with them being such a big exporter of powder, if that is going to have longer lasting implications of the drought in New Zealand, you'd think that we'd get some more support out of that on our cash powder market, as the buyers might be scrambling to pick up more loads of powder at these lower prices if they think there's risk of prices going higher due to tighter inventories globally. We're not seeing any of that here, and we're actually seeing the opposite. There's, like I said, a lot of offering going on in today's session. 4 different sellers are offering carloads of powder, and we sold off 4 cents here today, and that's where we finished for the week at $1.11 a pound, down 4 cents. So again, that's a little bit of a warning sign that if this drought in New Zealand is going to cause longer lasting strength, I would think we'd have to see cash powder prices start to rebound, not sell off. So that's something to watch for next week as well. So again, cash powder prices sold off 4 cents here this week, settling at $1.11, down from about $1.15 from last week. So let's take a look at what we saw in the Class 3 market now. Over the course of the past couple of weeks, we've been seeing a lot of big moves, and not just up moves. We've been seeing a lot of big up moves day to day, and we've been seeing a lot of big down moves day to day. There's just been a tremendous amount of volatility. We've seen 50, 60 cent up days, and we've seen 50 cent down days mixed in over the past few weeks as well. And this week was no exception. Again, we saw major moves in both directions here. And again, this comes due to, or really in an absence of any major moves in the cash cheese market, which is really non-typical. So it seems like the Class 3 market is really trying to figure out which direction it wants to go here. It seems like any speck of bullish news that comes out, the market just latches onto it and drives prices up. And when that doesn't materialize, we sell off sharply following that. So right now, the Class 3 futures and cheese futures are still holding a lot of premium over the cash cheese market. So the futures market is anticipating that cash cheese prices are probably going to come up a little bit. And if that doesn't materialize, that could be the catalyst that pulls Class 3 prices back down. But you can see here that we have gone through so far a pretty nice correction in Class 3. In fact, we've seen prices rally over a couple of dollars here. You can see it here on our second month continuous weekly chart. Again, this is a weekly chart of March milk right now. You can see that our recent low on the continuous chart was down around 14.25. That was our January low, and then we rallied all the way up to about 16.28, which was this week's high. So that's a pretty sizable rally, over a $2 rally from the January lows, and we did finish on a weaker note this week, though. Again, with a lot of offering in the cash markets, aside from cheese, though, that did seem to put some pressure on things during Thursday and Friday's session. And the March Class 3 contract settled at just $15.53 here this week. That's a gain of 1 cent on the week, so seems like a quiet week overall. But we started out Tuesday's session with the March contracts rallying 61 cents on news from the Fonterra Global Dairy Trade Auction. That auction showed the Global Dairy Trade Price Index up 11%, and that's probably a direct response to the drought conditions down there. We saw all Fonterra prices basically rally in that last auction. Once those results got released, that's when Class 3 prices took off to the upside in anticipation of our product prices following that trend, and that's not exactly materializing. So we rallied 61 cents on Monday, or I should say Tuesday rather, and then Wednesday, Thursday, and Friday we took back all those gains, and we finished actually 75 cents off the high this week for March milk. That's down from the high of 16.28, settling at 15.53. So although we finished with a penny gain on the week, it's a very weak close overall and a little bit of a reversal there. So not to say that this correction is definitely over with. There could still be a lot of volatility, and I would say that there's probably a high probability that the volatility does continue here as the market tries to figure out just how important the drought down in New Zealand is versus what's going on here domestically. And we will get some milk production and cold storage numbers out later this afternoon that might help to clarify maybe which way the market could be headed here if we continue with those trends as well. So that's something to look for as we go through trade next week. So again, looking at the week ahead, we are going to have some important reports out, fundamentally speaking, later this afternoon. We will get our January cold storage numbers, so we'll get a look at butter and cheese inventories, and we're also going to get our January milk production report. Again, that's later this afternoon. We'll see if milk production continues on the same path. Generally, January production, we don't see tremendously big year-over-year growth. We looked back at that here today, and normally the year-over-year growth has been kind of on the smaller side, so we'll just have to see where those numbers come in, though. Otherwise, it could kind of continue with that trend of 3 to 4% growth if it continues on what we've been seeing over the past few months. Aside from that, though, that is going to do it for us here today. On behalf of the Market 360 advisors here at Stewart-Peterson, thanks for watching and have a great weekend.